All right. Good morning, everybody. Made it through the weekend. So last week, the market sold off a little bit on comments from a Fed member who suggested that they may need to increase the pace of rate hikes. The market didn't like that at all because they'd already been pricing in rate cuts. Right now on the screen, we're looking at June probabilities. And one of the things that you want to do when you're on this Fed Funds Watch page is look at the change from one day to the next and look at the change from 1 week out. So a week ago, the idea that by June we would get to the target rate of 5.25 to 5.5 was only a minuscule amount, 3.6, and now it's nearly a 20% probability that we get to 5.25. Right now we're at 475. If you're not used to reading this kind of chart, it's using a range between 475 and 500. Just pick a number. It's easier for your mind to deal with. So if we say that the current number is 475, then what we're talking about is by June getting to 5.25. We had almost no chance of that happening a week ago, and now we have nearly a 20% chance of that happening. So for May, it's nearly a done deal at this point that we're going to get a 25 basis point rate hike. That probability went up 12% last week. So they're even more convinced now than they were, a week ago that we're going to get 25 basis points. That would take us from 475 to 5. Right? Thanks, Captain Obvious. We can do math. So when we're looking at June, we're not really looking at it from the idea that we're at 475 and we're going to go right to 5.25. We're looking at it as if we were to go to 5 in May, then we would go to 5.25 in June with another 25 basis point rate hike. Now, granted, at the moment, they're still pricing in the idea that we're going to pause after May. So the biggest probability for June is that we're not going to get anything and that they're going to announce a pause. Buy the rumor, sell the news. And that's what we've been seeing right now. The rumor of a Fed pivot, mentioned it, I don't know, a month ago. Buy the rumor of a pivot, equities are bid, everything's rocking. It's choppy and it's pretty nasty, but it's still pushing higher. When they announce that pivot, I think we're going to get the other side of that cute little phrase. So for right now, it's still buy the rumor because they have not yet announced the pivot. One of the things they did do during the banking crisis is they lowered their anticipated projected target rate. Right? You got to remember how all of this goes together. They're looking to raise rates beyond neutral. We were basically at 0. So first we had to get to neutral. And then we had to raise rates beyond that into a mildly restrictive territory, which is vague. Even if we knew what neutral was, which we don't. So neutral's hypothetical, and getting to a mildly restrictive point above that hypothetical level is what? Some pie in the sky fancy idea. So they don't know if they found the mildly restrictive territory that they've been looking for. They think they found it. So we're close to getting a pause, but we don't have a pause yet, and it hasn't been announced yet. And as soon as it is announced, then we'll see it start to get priced in. So right now they're still pricing in what we've seen last week, especially on Friday, is they started pricing in another rate hike for June instead of a pause for June. And that pushes the pause out to maybe July. And right now, 5.25 for July would imply that pause. And we can see over the past week, it went up nearly 10%, 5% in one single day on Friday when they heard that Fed speaker out there chipping teeth. So that was the reason for the sell-off Friday. The rebound, well, it's still by the rumor. We do have Empire State Manufacturing. That'll be today. It's not anticipated to be too impactful. But like I always mention, that's when it can be, right? When everybody kind of just shrugs and says, we're not worried about that one. Yeah, until it catches someone by surprise. So there's no, expectation of surprise today, no expectation of a big move. But like I'm going to show you here in the volume in a minute, there is a little bit of concern out there. All right, here's your spot gamma levels for the SPX and the ES. Go ahead and let you grab a screenshot of that. Here are the levels for the SPY. And here are the levels for the NASDAQ. And these morning briefings are streamed to YouTube. So you can go back and watch the recording and get it later if you didn't get it now. All right, Asia closed, or Hong Kong closed inside day. So they had a really nice reversal on Friday. Nice reversal off of those lows. Good follow through day from a healthy stance. But not so good if you consider the really strong resistance and its inability to get through that zone. If you look at Japan, Thursday, really hard sell-off. Friday, nice recovery with an inside day breakout. And then today, where it was basically looks like they were closed. And, if I was trading last night in the Globex, I would know for sure. But I didn't trade last night, so I don't know if they were closed. This sure implies to me that they were closed. Could have been a holiday or something, right? But this really doesn't look like much. And I could be wrong. Maybe they were open and they just didn't do anything. But yeah, this really looks like they were closed for a holiday. All right, is 12:45 over in Europe. We got basically nothing here as well. just a really nice continuation. Bar number 5. Oh, I see. Never mind. I'm on a weekly. Let's revisit that. That would make a little bit more sense. So now if we look at the FTSE with Europe, really nice follow through over the last month. Inside day breakout that failed. They're still open. So, you know, they have time to complete this and rally back out again. Looks like a hurry up and wait. So we're going to backtrack here to Japan. Gapped up, inside day breakout, came back in, rallied right back out again. And they're holding outside of it, but it's close enough that if it fades even just a little bit more, they're going to be back inside the box, back inside yesterday's range. And for Hong Kong, that red line that I drew, that red zone, is still present. Still a lot of defense and selling across the top. Really nice recovery from Friday. Good follow through. And that liquidity that it ran into, at least it didn't whack it down like it did on these other attempts. So we might just be getting the follow through finally. We have additional auctions today at 11:30, and they're on the front end of the curve, but there's still additional auctions to be mindful of. If you're looking to run a 0-day in the afternoon, you might want to at least wait until after the 11:30 auctions. Otherwise, the Empire State Manufacturing is very likely going to be the biggest thing on the docket, and these various Fed speakers, including Christine Lagarde out of the European Central Bank, and we got Barkin as well around noon. So a pretty big list, right? European Central Bank, Bank of England, and then US Fed and housing market index. If we take it over to the economic calendar to kind of gauge which of these are likely to be the most impactful, Christine Lagarde speaking is ranked pretty high up on the list. Yeah, that reminds me, the word default has started to be thrown out around the world. Other nations are eyeballing the complete cluster. Try to keep it family friendly and use another word. The complete mess that is our nation's capital, and their inability to put a budget together. This is going to get louder as we get closer. All right, and when Barkin speaks today, he will be in person. It's not going to be a recording, and that means he might take questions afterwards, which is where you know, some real shake and bake can come into the market. So keep your eye on Barkin. The easiest way to keep track of any of those speakers is just to watch Finance Juice, because once they start talking, if they say anything that this thing believes might be impactful, they'll highlight it in red. So it's easy to identify when something is said that's really big, right? And that way you don't have to watch some boring video. We got tips this week on Thursday, I believe. All right, so now finally we're over here at the futures, get the ES. And I mentioned it a few minutes ago that the volume was running a little light. We're sitting at basically 79 this morning. It's fine. You know, if it was below, say, 70, I'd be a little concerned. But it's attention getting that it's this low already. One of the reasons that I believe that maybe one of our counterparts around the world was closed and that we were just not seeing their activity here, right? Japan, somebody. It really looks like somebody was closed. Now you can check to see. Thinkorswim will show you markets around the world and whether those markets are open or closed. The thing is, Thinkorswim doesn't actually check to see if they're really open. They just look at what time it is. So today, for an example, it's almost 1 o'clock in Europe. On a Monday, Thinkorswim will say, "Oh yeah, they're open because it's Monday at 1 o'clock." But if they're on holiday and they're closed, Thinkorswim won't tell you that. So you can go to a website called Market Hours, Trading Hours. You don't need an account. You don't have to sign up for anything. But this will check around the world and see, first, is it the right time for them to be open? And then second, are they on holiday or are they on lunch? Because markets around the world actually close for lunch. We don't, but other nations do. And then it'll let you know, right, if they're really open or if they had a holiday and that if they're closed. So we can see London is open until noon. Then at noon they close, go to lunch, and then they come back and they're on again until 4:30. It's only 1 o'clock, so another 3.5 hours for them. One of the things about that makes it useful is we keep track of when Europe closes because it affects the market. On our market, that used to be 10:30, but we changed time, right? And they changed time, and now their close is at 11:30. So volume's a little light. It implies either A, that a nation around the world was closed in the overnight hours and we're just not seeing the activity, or B, the market is waiting on something. Well, we just went through all the economics on the agenda and nothing really stood out as overly scary or concerning. So if the market is waiting for something, we didn't see it. One of the reasons I use this cumulative overnight volume is because there are so many things that can affect the morning that we don't see, we don't hear about until they come out, but other places already knew, right? So funds, firms, institutions, they spend a ton of money to hire analysts and evaluate things that are going on. If there's something big coming and they know about it, it would make sense that they're standing aside waiting for whatever it is to come out. And we don't have that kind of resource. So trying to find every single thing that could be happening this morning be a lot of running around with no guarantee that we're actually going to find it. But what we can do is just recognize that something is off. And today, something is off. The volume's a little light, and it shouldn't be unless a nation was closed. So proceed with caution is all I can say between now and the open, and really between now and 10. Be very careful. It really looks like the market's waiting on something. So with that in mind, this gives us a very narrow overnight. We call it the IB, the initial balance between the 6 o'clock Globex open and 7 o'clock. It's basically an open range. Only with an open range, you get to choose. Do you want a 5-minute open, a 30-minute open, a 1-hour open? But with the IB, you don't get to choose. It's always 1 hour. So this 1-hour open range, if it's really narrow, it implies that a lot of these funds and firms have not done their job for today and that they're holding back. They haven't yet committed themselves. If they had, we'd see a really big move. And then the idea is, well, they've already accomplished what they needed to accomplish today, and that we're very likely not going to see anything else. So right now, the market is giving us a signal that says, I'm waiting on something. And when we get it, it's likely going to be very impactful. So this is a nice little shortcut to digging all around, trying to find some hidden little gem of whatever could be coming out today. We just look at the cumulative volume and look at the action through the overnight hours, put the two together and realize something's on deck that we can't see. And is very likely going to be done by 10 a.m. We don't have a market maker move, which is a little odd. If there was something really big, they would be pricing into it, right? They'd be hedging, getting those out of the money options, and protecting their contracts. And we're not seeing that, right? So no market maker move, at least not yet. And we're not seeing them trade farther along the curve really either, right? Because another way that they could hedge would be to run like a basis point trade, long in the front, short in the back, or vice versa. And we're really not seeing that. And yes, you can trade that way too. If you've ever read a COT report, Commitment of Traders, you'll see a lot of these funds and firms, they don't necessarily close out of their longs. They just add shorts. And they don't close out of their shorts, they just add longs. All right, so their net position just gets a little bit bigger between how many shorts they have and how many longs they have, and they increase or decrease their risk, not by getting rid of things that they're already holding, but by adding more to what they're holding. Crazy world. So you could be long in an ES and then go short in MES. That'd be one way to do a basis point trade. Or you could be long in front, short in the back, or short in the front and long in the back, either way. Rather than closing down a trade that that might not be working for you, or to add a little bit of protection, hedge. Seems like I'm the only one that ever talks about basis point trading. Oh, come on, Thinkorswim. I broke it. All right, 10-day, 30-minute volume profile. We are above the point of control. When we're at the top of the box, we expect to go to the bottom. When we're at the bottom, we expect to go to the top. We were just at the top, pulled off of that, and have tested that point of control at least once. We finally made it through that air pocket that we had talked about. And right now we're building a significant level of resistance at around 41.75. Call it 41.85 to 41.90. Be this really big reversal from Friday. Right, so Friday's high. I guess I was right the first time. Let's do it this way. Friday's high would be way too late. It would be more like Friday's open. Yeah, the RTH open 41.66 and the Globex open this morning 41.75. That 41.75 is what we want to watch for. Really close to Thursday's close. And by the way, all of this kind of looks like a bunch of unfilled orders. So if we do get back up to Friday's high, first touch play, that thing's going down. So it'd be a nice short when we get there. Just keep in mind, first touch plays like that, they're good for, 6 to 8 points. It could be the reversal and we just sell off completely, but I wouldn't try to, size up in it. But a high conviction short, 6 points with 10 contracts, that'll get your day done. We really have a lot of support underneath this. I don't like using that word support in this situation, but it'll work. It's the best word we got. So if we see the market sell off, Friday's low is got a lot of structure around it. We're very likely going to stabilize there first. If we break through that, then things might pick up a little bit. 41.31 is a cog line. 41.32, maybe something like that. It's right in that area. If we get below that, we could have a very quick, very fast sell-off down below 4,100. Or at least down to it. Remember, that was the reversal spot that we talked about, how it was an odd reversal because there really wasn't large buyers down there. There wasn't anything that was triggering, buy orders here, and it wasn't trading activity that drove this back up. It's some other market. So 40.30 is the line in the sand. If we break that, we're very likely going to go to 4,000 and then retest that area again. All right, mapping out the 5x5. We don't have any VPOCs to carry up. We had one from Friday, but it already would have been taken out by this leg down here. So there's no reason to draw it now. It would have been taken out right there. All right, we're still 2% above the 10-week moving average. As long as we're maintaining above that 10-week, it's bullish in the market. Bigger picture, right? More of a swing. This is a weekly point of view. But in the bigger picture, in equities in general, the S&P is still holding above that anchored VWAP, which is this cyan line here that starts at the first of the year. As long as we're above that anchored VWAP, then we're bullish the market. right? Bigger picture in equities across the board. Banks kicked off earnings last week. So, for at least the next 3 to 4 weeks, we're going to have a load of earnings coming in, and banks usually set the tone. So, if they come out, Jamie Dimon and others, and they're really, sounding the alarm for dangerous economic conditions, if their forward outlook is squishy, if they imply that they're worried, the market's really going to react to that. And it's one of the reasons that bank earnings are so impactful and is so important. So over the next few days, really keep your eye on what the bank earnings look like and their announcements when they come out, chip and teeth. Otherwise, we are coming up into, a known resistance area, that 4,200. And the thing about a pivot point is that we're more likely to overshoot or to come up a little short. Right? And this is something that I continue to try to drive home to people. When you mark a pivot point, a line in the sand on your chart, whether yesterday's high, low, close, weekly high, or just looking back and finding an old pivot point somewhere. I know we've got a million examples where price comes up and tags a line perfectly and then falls away, or tags a line and breaks through it to the other side. And these perfect touches are what, a lot of us are trying to trade, but it's an unrealistic trade. So when you can mark out a pivot, think about where all the other traders are at and where big institutions are going to try to manipulate that line. And they're either going to front run it so that they don't miss the move, or they're going to be on the other side of it. Liquidity resides on the other side of the pivot. So it's why we overshoot more often than not, or we come up short and we don't get to a pivot point. For newer traders, what I hear most of the time is, I don't think I drew my line in the right spot. Well, if it was yesterday's high, you couldn't have got it wrong. Right? It's the high. You just marked that level. You did it right. If price didn't get there and missed you by 3 ticks, you didn't do it wrong. They just front run the pivot and we didn't get there. So when you are drawing levels and zones and marking out your chart with pivot points, just keep in mind where the liquidity resides and the fact that we really shouldn't stop right on the pivot point. When we do, it should make you nervous, not happy. All right, Bitcoin is down nearly 3% this morning. Followed by communications and semiconductors, and even bonds are down this morning. I was looking at that a little bit ago because they were actually breaking lower right before I started my stream. They had an inside day breakout this morning. And if we were looking for a really nice inverse relationship between stocks and bonds, this breakdown should have been a breakout for the ES. And obviously it's not. So that means stocks and bonds were squishy this morning. If we consider only the Globex, sideways and then down, and we look at only the Globex and the bonds, sideways and then down. These two had a really nice relationship last night. Not perfect by any means, but certainly not inverse either. So it's not stocks versus bonds this morning. We are seeing yields up. The 10-year is inside day breakout to the upside, 3.54. Really nice double top in the dollar. And the VIX woke up. So I'm going to swap over to the VIX futures just so we don't have that weird settlement gap. And we're running, the current front contract is running at 18. Let's dig into that for a minute. So the VIX futures have a time scale, right? We've got May, June, July, August. We want to make sure that we're not getting into backwardation of any kind. So the April series is running at $18. May is at 21.9. And then June is 21.6. That's a little bit of backwardation. So if you're new to that phrase, basically you got a time curve like this. Here's April kind of in the front, and we can go out to December farther away. Things that are farther out in time are more expensive. So if we consider, dollars over here on the side, higher cost, lower cost. Things farther out in time are more expensive, generally speaking. This is contango. It's normal. It's the normal gentle curve of money and time. If it starts to invert and we go the other direction, where things in the front end are more expensive than things in the back end, we call that backwardation. Since we can see this time scale, looking at expirations here, and we can look at cost, we can check and see, are we sliding into backwardation? And right now, those May contracts, 23 days out, are almost $22. But the June contracts are closer to 21.50, and same with July. July is 22.50. So it's a very small little blip, like it goes down and then back up again. Usually when we see something like this, the market is pricing something in, right? It's showing, hey, what's up with June? Remember, we were just talking about they were beginning to price in a rate hike for June when they had believed we were going to pause or even cut in June. And the volatility is picking up because of that. Buy the rumor, sell the news. This looks like the market is preparing for a little bit of volatility, a little bit of chaos. They're bidding up the May contracts in volatility. Pretty cool we can do that, Now we're really not seeing it here. I'd have to bring up a different contract. This is the continuous contract, and what we need is one of those. Let's say the June, which is the M, or maybe the N if we look at July. So K, M, or N. Yeah, it won't let me turn off the other one. So again, a little bit of dip, but it's not showing up yet. So we're pretty early to it. Maybe it needs a little bit more work. The thing is, though, it's starting to show up. You'll probably start hearing it, in I don't know, other places at some point, especially if it grows. So here we're looking at the VVIX. It's basically the VIX volatility indicator. I mean, it's not that, but it's the easiest thing that I could give you for a description of what this is. So, think about going to SPY or the Qs and you bring up implied volatility and you put it at the bottom of the chart. Well, when you go to the VIX, you can't put the implied volatility indicator at the bottom of the chart, right? That doesn't make sense. So how do we gauge how volatile the VIX is? Just like how we would gauge how volatile SPY or the Qs are. We can't use the volatility gauge for the VIX. We need something else. That's where the VVIX comes in. So you can see that we're underneath this massive trend line from all the way back to 2014. And since the first of the year, we've had a pretty wild ride in here, but we're still headed to the downside. So volatility is still decreasing. We want to look for this to change when we get closer to this anticipated pause or pivot. Volatility is cheap right now is a really good way to look at it. So if you're holding a lot of equities, say you've started, buying things up again, and you don't really want to close all those long equity trades down, stocks, options, whatever you're holding, longer term trades, and you're just looking at all of this thinking, the risk is mounting. With volatility so cheap, maybe consider, buying some of it. Buy a couple of calls, or get a call spread. The thing about trading in the VIX, the VIX, is that curve is going to chew you up. And then, of course, options decay too. So it's like a double whammy. Trying to trade out of the money options in the VIX for a hedge, like 2 months out or something, that's almost a guaranteed loss unless we get massive volatility coming back into the market. And I mean like 2020 COVID style, oh damn size volume. And if we don't get that, your out of the money call option is very likely just going to wither and die a very slow death. So if you're going to trade the VIX, one recommendation would be get in the money or at the money with those calls, or, build it into a spread where it's really cheap and the loss won't bother you all that much. Hedges are supposed to be a cost of doing business where you anticipate the hedge is going to lose. You want the hedge to lose so that your long trades are fine. So if it's a guaranteed loss trade, a hedge, then, keep it small. Otherwise, the hedge becomes so big, it's a source of its own risk. and then it defeats the purpose. All right, looking at Apple on the weekly chart, we had a solid close after a really hard gap down. So it's follow through time. We need to get out of that indecision candle from 2 weeks ago. Basically on the daily chart, this sell-off. Apple also has a market maker move. So they're pricing in options on the front end at a higher rate than the next series out. It's where a market maker move comes from. We can see the average implied volatility here on the right side is at 26, and the next series out, it's at 24. That difference between these two is why we are seeing a market maker move. And options implied volatility here, they don't use the rate of change the way that the implied volatility is on the chart. That's what the indicator out here reads. Rate of change from candle close to candle close. Well, in the options chain, we don't have candles to close, so the volatility is read differently. What it's picking up is the speed of the options traded and where those options are traded within that series. So they're bidding up the front end of Apple. They're trading heavy in those options. That's why the implied volatility is up in the front. And then that's why we have a market maker move. So make or break on the week. I think if we get this inside week breakout, we can close that gap at 169 and maybe even close the next gap. Or I should say get into the gap channel and then close the gap, 171.50, with an overshoot testing that 176.5. I know that seems like a long ways away, but look how far, it can move in a week. But to even kick all of that off and get it started, and we're down on the day. I misspoke. We're not down. We closed at 165.21 and we're at 165.90 right now. So we're up, about 3/4, 75 cents. I'll tell you what, though, we are setting up for something really nice here. So let's just kind of lay this out. Apple, inside day breakout, we got to get above 166.32. And then this red day here, where we had a gapped up fake breakout fast failure. Oh, that's always a hard one to stumble through. On April 4, we got to get above that, right? That 166.84. And considering, this is a rally base drop and a lot of liquidity, and that's a distal line that I just drew. We're going to get tangled up in the proxy line, which we tried to go through and we didn't make it. So we got to rerun the proxy line, get through the distal line. And there's a lot of trades sitting up here. One of the good things about trading Apple, especially for an intraday, is that you can use the free book map when you're trading Apple and Microsoft. But I like Apple better when I'm day trading than trying to day trade Microsoft. So we're going to be looking for another fake breakout fast failure on Apple. And if it actually does break out and break through, then we'll worry about, how far we can get from there. Right now we got a bull pennant, and we're going to be looking for, a continuation of this bullish push and get above that 166.84. I don't think it's got it though. Not today. Not looking at what everything is that we have here. So emerging markets are up a little bit, and K-Web is up a little bit. BABA, PD, I don't know. PD doesn't have anything, so we'll skip that one. JD, Baidu. The Baidu is already starting to sell off a little bit. So all these K-Web constituents, these K-Web China constituents, these ADRs, they're bid up this morning. That's giving emerging markets and K-Web a bit of a rise. But usually when we see that, we also get proxy names and semiconductors. Semis are down. Maybe that's just one single print. It's not really enough to give us anything. TSM was up inside day breakout, and now it's giving it back. AMD's got a really nice bear flag. And we're right in the middle on NVIDIA. We don't diddle in the middle. Micron's down. So semiconductors are down, going opposite of the K-Web names. Bitcoin's down. Tesla's all over the place. It was up and then it's down. Now it's back up. It doesn't know. Inside day breakout in Tesla. Now this is a really nice setup. It just gives it to you, right? You got to love that. By the way, look at that gap close, a liquidity gap. And it didn't quite close it, but it sure tried, didn't it? Big spike, we get the push up. Price doesn't like it, comes back down, closes the liquidity gap, and now it's coming back up again. 187.81 is the line in the sand for Tesla this morning. That's your breakout level with a run towards 191.5. Could get an overshoot into 192. And that's today's. That's not necessarily a swing. But on the other side of that, if it comes back up to that 187.81 and fails to break out, or breaks out but comes back in, if it comes back in, it's a short right off that high. I wouldn't even wait for anything else. And the target would be getting back down to 181. That'd be, trying to get back to Friday's lows. I guess that's 182 down here. So you got a really nice setup. For the lower level, if you did want to be a little more cautious, you could wait to get through Friday's close. Call it 185. All right, so you're looking at 188 for a topside breakout or 185 for a downside play. I'd rather short it off the highs personally, but I get it. If you look at this reversal that we've had today, we already went up, we went down, we went back up. So trying to see this breakout fail and then short it right there, I can understand if you're concerned that it might then come back up again and run you over. But shorting off of this high is what they call an LRE. It's a low risk entry. So the probability that I lose the trade is greater because I'm not waiting for confirmation all the way up here. But how much I lose is much, much smaller. And I don't care about keeping score, how many times I've won or how many times I've lost. I care about how much I win and how much I lose. So the LRE for me suits me better, but to each their own. My way is not the only way. It's just my way. You do you. Microsoft took it all the way up this morning and failed, at least so far. I would watch closely to see if it's going to make it through or not. Boy. What was that level? That's the inside week breakout. So here's the weekly chart. There's the little cloud that I just drew. And you can see this morning in the pre-market how we've already made it up there. So this morning, Microsoft is trying to break out of the first week of April. And at the moment, it rejected, but it's a soft rejection. It didn't just crash and burn. It pulled back some. I don't think it's done yet. I'm going to get another run at it. That's really bullish open, by the way. Let's talk about this red candle. This is last week's red candle. So we had a really nice recovery. It sold off in the week, rallied back up, and it closed down here. The thing is, we had a really nice bullish run, and I've zoomed in so you can't see it, but we had a really nice bullish run, and then we pulled back and we recovered. And now this morning, we're opening, or at least we're testing to open way up here. That's a really strong bullish continuation. And when you have a red candle that closes like this after a nice drop down and a rally back up, and then it closes here, and then in the pre-market, it runs all the way up and it does that, that's really bullish. I mean, so the fact that we're selling off a little bit here this morning, don't let that little bit of a sell-off slow you down. I don't see that as bearish even a little bit. So now I'm going to zoom back out a little bit. Look at this run over the last 5 days, or 5 weeks, excuse me. Starting with the really big week, and then 3 other weeks in a row. 1 red week to reset the count, and now we're looking at another 4 to 5 weeks. And that kind of lines us up into that FOMC. Just, keep in mind, it doesn't owe us X amount of weeks of green or red or anything like that. But there is a 5-bar rule that we were due a red bar likely within a 5-bar period. Well, we got our red bar last week, and so far this morning, that's looking crazy bullish. One little note of caution. When we take it to a daily chart, we were range bound inside of this box for a while, right? Count back. I mean, we've been there hanging out. And now we've broke outside of this box with a strong gap up. And we can see when we were inside of this box and we broke out of it with a strong gap up, that's really all we got that day. The next day, yeah, we had a pretty good follow through, but on that gap out day, we really didn't get anywhere. Worse, we can get a fake breakout fast failure. So, the idea that we've gapped out, we can see where we closed here, opened here, rallied just a little bit more, and then we dumped. Same thing, closed here, opened here, dumped. So if we had opened down a little bit, I'd be more bullish, but still, either way you go on the weekly, and this is, where it matters. that's a really bullish start to the week. Now, this is a weekly chart, so it doesn't have to be crazy bullish right from Monday morning, straight off the jacket. But on the week, that's a very, very bullish open in Microsoft. Man, look at Meta go. So Meta's coming up into a resistance, and I think it closed that gap. Let's see, close the gap. Ooh, it closed the gap in the pre-market this morning. That don't count. You got to show me. I guess technically that gap had already been closed, hadn't it? All right, so never mind. It's already been closed. Still, that's a nice retest of that gap. And I'd like to see it get above this and then pause. If it doesn't, then I think that'd be a good place to put on a short-term short. Just keep in mind when we got up into this area here, it was a short-term short, and then it went bullish again. Right? And bigger picture, we're still looking at a really big cup. Meta and Netflix were on Seeking Alpha's contrarian trade list for 2023 back in January, when everybody was still bearish on these things. I'd say they did a good call. So we're looking for this to prove to be resistance. Remember, we could overshoot a little bit. I think it'll stay below 240, at least, in the short term, for a nice little pullback. And these are weekly candles. So, we're talking 4 to 6 weeks. But I would wait for this to actually give us a true pause. And right now, I mean, we don't have that. So let it prove it first. None of the others look as good as Microsoft this morning. All right, so a little bit off of the beaten path. This is AI. And it's just like it sounds. Kind of a newer company in the grand scheme of things, right? It hasn't been around for very long. Started to get crazy excited on this trendline breakover. And we had this really great move where it went from $10 to $30. And then it's been digesting here, and we're kind of coming along these lows. I don't think this is a trade today, but it's something I wanted to kind of put in front of you guys. I don't think this is done. Just be careful. It's it's a newer company, volume's really light. Probably want to dig into a little bit of the fundamentals and see its connection to other names. But yeah, what do they say? Do your due diligence. Bah. Okay, the sell-off in Bitcoin has increased a little bit since I've been streaming. And tech is trying to pick up a little bit, but it's not up enough. So we've really only got emerging markets and K-Web. Watch for those to fail. If they're the only thing left holding this market up, well, that was a big move. What? 8:30. Nah, we didn't even get 5,000 contracts. Never mind. I really wish Thinkorswim would fix that. All right, so you got a nice trend line breakover play, but it's the wrong time of day. I really wouldn't. I wouldn't play it. And as you can see on the ES on the weekly, last week we did get outside of that wedge, and right now we're just trying to resolve it, trying to prove it. All right, everybody, be careful, be safe. Have a good day. I'll see y'all tomorrow.